You are live.
Okay. I was like, okay, I guess so. All right. Hope everybody's doing well on this fine. Was today Wednesday? Hump day. On today's hump day. ¿Qué pasa? ¿Qué pasa, even? How you doing? How you doing? All right. So, obviously, you guys see the market today. You see how it just obliterated, right? We tanked. Um, we went lower than the previous few days. Uh, it's nothing new to that, right? And we've had some volatility in the past few days. The good thing about what the market has been doing for those that actually play options is that you're getting quite a bit of a movement, right? And not this $2-3 movements like on on SPY or the Qs, but you're getting more of a $5, $6, $7 movements, which is fantastic because those are actually able to stay in the play and or trying to get into a play. You can pretty much get into a play at any given moment, right? And that's the beauty about when you have a bigger movement and not just a small chop range. And so for the past couple of weeks, we've been noticing that, right? And the times where it looks like it's a little choppy, and then right after that, it makes a nice little move. And so with the way that the market has been for the past few days or the past few weeks, it's very easy. Like I felt like it's really easy to play into these option plays, and I'm not going to toot my own horn or anything like that, but for the past few days, most of the plays have been over 100%, 200%, and that's simply because you just have to hold it, and knowing where the price levels is. So what I want you guys to do is I want you guys to take a look at the chart that I'm about to show you. And this is a SPY chart. And we talked about this in the beginning of October, right? So I want to go kind of into this in this chart. And I want to show you guys, what we talked about in the past and how it's coming into fruition as the market, on a daily basis, right? And I want you to see how well these levels have played out. And I've utilized these levels. I utilize these levels when trading, for example, for today or, previous days when when I go on stream and, we do a live stream and, I show that this is where we're at and this is a price action. So we did this in October, around October 3rd. And I'm going to kind of go back, towards that time period where we, where we decided that, hey, let's look at these levels, which was right about here. This is a time where I put in these levels with you guys. I told you I'm not going to change it. Everything's going to stay exactly the same way. You could go back into some of the videos in the past, and you can see that we made this chart according to what I stated that we were going to take a look at, right? And as days went by, I'm just going to show you how these price actions kind of played out. And now on that Thursday, I also stated that, we were around that 420.87 area, and I stated that expect a bounce, right? And if you go back into the video, you'll actually see me stating that we're going to see 435 to 440 on the next pump. We did. And so I'm going to show you just how that kind of played out, right? So when we look at those levels, and I stated that we'll probably hit that 435 towards that 440 area. We hit 438.51 before we kind of just dropped down. Now, as that movement happened the following week, I want you to take a look at how price action played out. So I'm just going to remove the extended hours real quick for you guys. And when this pump happened, like you can see how it bounced off of one of our price action levels, right? So this was at 432.60, and you see how the 5-minute candle, like no candles closed below it, and we just kind of based here. You see a tweezer bottom formed right here, and then the pivot point. So a lot of people were like, yeah, we were going to go ahead and put this pivot in. We already had this in here, right? This is nothing new for us. We already had this in here, and this is where that pivot actually happened. And for us to kind of catch it just off of that was very, was pretty nice. Obviously, at that time, we said that we didn't have any price action towards the ahead of the 432.60 because at that time we were at 420. So I was like, let's take a look at how it would react around 432. right? So then obviously like afterwards, like you see how price action came into place, and it's just relatively easy for you to kind of play it consistently, understanding that okay, well, if this is basing and you can see that it bounces off, this was the magnet level that we had for I think it was like October 2nd or whatnot, and is coming into fruition, right? So you see how the candles kind of just hovered here and then it dropped. It bounced right off of this price action level at 428.33, and it got rejected right at 432.60. And so when you're getting into a call position, or when you're looking for that uptrend, you look for these price actions, right? So you say, okay, well, I'm going to scale out if you have multiple contracts at each price action. Now, if it rejects, you can easily just take, if you only have a single contract, that's the best time for you to exit your position. So, that's something that I want you guys just to, kind of understand, is like why we look at these price action. And if you notice that once we drop out of here, which was on October 19th, you can see that we dropped from that 431.96, and we went all the way down towards 428, and further down. Actually, we hit the next price action levels on Thursday. So we went from 1, 2, 3, 4, 5, 6, 7 price actions in the same day. Actually, 8. So we went almost very close to 8, right? So we went to 7, we came back, and we closed right right at we got rejected right at the next price action. So following day, you can see how we just kind of went through everything, right? And so when you're getting into a put position, because you're seeing the downtrend and you're saying, okay, well, hey, I got, a lot of people say, well, I already miss out the big movement. No, just because it drops, this, like right here, right, it drops here, that doesn't mean that you can't get into a put position or a play. And I want you to understand that, it's never late. And, it's about timing, right? It's about, okay, well, hey, how is price action related over here? Okay, I'm going to get into a put position since it didn't break above this, this price action. My target would be back here. And then obviously the second. So now you have two target price action targets because it got rejected over here. And then you see that how it came back, obviously, and then it fell and it almost hit this price action at 420.87. The following day we gapped down, right? And this was a nice little gap down that we had. So on this gap down, you see how like the candle kind of went underneath that 418, and then we came right back out. We hit that first price action, second price action, third, fourth, fifth rejection right at that level, right at that 424.96, came back to that price action, came back. And this is just a beautiful thing just to kind of see and play, right? And you can see how it correlated on a daily basis after that drop, right? We haven't gone, we're trading in between these price actions. Like we're going and hitting these price actions. And if you notice that, okay, well, we can't break the other ones. Now we're going, further down. And same concept happened on the 25th, right? We came back down here, which was today, and we hit the blue price action, right? And look how we bounced right off of it. And then we bounced off of it again. And we got rejected right towards the, that 418 area again, right? And so this is how you want to, take a look, right? So now, for example, for the future, and I'm talking about for either tomorrow, Friday, and so forth. Now you want to see, okay, well, do we continue this downtrend to the downside? And we have these price actions levels in place. So now if we're going to look for a put position on the next drop, or, on the next lower high, where your price action could relatively go to. Same thing on the opposite side. Okay, if it breaks back above 418.60 and it wants to be a little bullish, and it's already at 419.50 area, that the next price action is at 420.87. You don't have to think about, okay, well, hey, at 420, it's going to get rejected. No, we see how 420 acted earlier, right? So this was where we dropped out of 420, we came back and we hit that price action, and then we fell out of that price action, right? So understanding that, if you want to get into a call, even if it's at 419.90, it's okay to look for a call because that the next price action is at 420.81. However, if, for example, it starts coming back down, what your stop loss would be, right? So if you're at 419 in calls, 419.50, and you're looking for calls, your stop loss should be at that 418.60, because if it rejects that, it'll come back down even more. So just something for you guys to kind of do. Yes, I am drinking a Kool-Aid Capri Sun. All right, I'm drinking Capri Sun. I'm cheating. It's my daughter's Capri Sun. She don't know it's fruit punch. She don't like fruit punch. As long as I don't take watermelon, she's all right. Anyways, just thought I'd share that. Just don't tell my daughter this. So when we're looking at the market overall, the sentiment right now is in a bearish sentiment, right? And why? Well, is it because of the news? Is it because of the bombing situation that's going on? Is it because Fed might not do a soft landing? Right. So we have to, instead of thinking about what's going on outside noise, we have to just look at what the chart is giving us and understanding that, when we play off of our charts, it's a lot more cleaner than thinking about, okay, well, hey, this should rebound. It's oversold. It's oversold. It's oversold. Yeah, it is oversold, right? S&P 500 is actually oversold right now. A lot of other sectors are oversold. That doesn't mean that we can't continue to go down further, right? So we tapped the 417 area, which was very important. I felt like I was talking to this about to the team on the stream today, was that if we break yesterday's low, we're going to take out Monday's low, which we did, right? So just knowing that. Why? Because we couldn't break above 425. We couldn't get into that 425 range. And when we can't get into that 425 range, it tells me that, what, like, there is a potential that we are going to drop. And then you can see right here, you see a 1, 2, 3, three rejections, right above that 424 46 area, right? It's three rejections. And I felt like, okay, if it comes back up one more time, it'll break. We should test that 425.10. If not, then we'll continue to the downside, which we did, right? So even yesterday, we bounced beautifully off of the 420.87, and then it hit that 1, 2, 3, three price targets to the upside. So even if you miss this entire movement right here and you got into this movement, you're still going to make profits, as it still went up over $1.50, right? And that's still good. So never feel like you're going to miss out on a play. The market is going to give you opportunities to make money. It is. Just don't play. Like I've noticed a lot of people, what they do is like they'll, whenever there's a drop, they'll just think about getting into calls right away. And it's kind of interesting to me, like, why? What's the psychological the reason being that people are getting to try to call the bottom and try to get into a call position when it's still in a relatively bearish scenario. Like today, for example, with SPY, there was this moment that right here, I was like, okay, let me get into a call position, and I chickened out. I took a $2 loss on a 424 call. And had I held for like 5 more minutes, that call actually went. I think we got it for like 30, 32, 33, 33, and I sold it for 31. And when I looked at it, it was like at $55, $56. So it was 80, 70, 80% and above, right? And I'm like, crap, but I told them, like, I'm like, the reason why I got out, I said that, okay, if it makes a new low of the day, which was right here, I'm going to get out of the position. And I stick to my rules, regardless of what it does later on. Like I stick with my rules, and my rules said that if I'm, and I stated that if I'm going to I'm going to cut it. If it's going to make a new low for the day, I'm going to cut it, because there's an opportunity, because there is a possibility that this will still go further down. Now, why did I get into a call here? Well, I saw, if I kind of zoom in a little bit right here, so you start seeing these buying wicks on the 5-minute time frame. I see a doji candle here, and I'm like, all right, you know what? They could try to base this and rebound, which they did, but I wasn't patient enough because I felt like, okay, if it breaks below the low of the day, which was this candle right here, we could potentially test this for 1860 area. Now, I was already in SPXS calls, which is the bearish sentiment for SPY. So it's 3 times leverage. And I was in a SPXS calls from the previous day. And so that was already, I was already up about 60, 70% on that. So for me, it was just like, all right, this is a good chance to try it here, because I still have something that I am very profitable in. And the same thing with the Qs today. We called the play right in the morning, and it did well. And so as this play was coming back up, a lot of people just like, okay, well, what can price do? So they see this entire movement right here, and they're like, oh, well, I'm going to miss out. No, you see this move down here. So there was a SPX put position that that I got into, which I alerted the team, and I'm just going to show where that put position happened and how we were still able to make 200% on this position, right? So here was the entry was at 420 424 4204 area. This was the entry. So missing all this right here, right? You miss this entire drop from 420, like that $20 drop. You missing the morning from 4232. But as time went on, I got into, I alerted out a play. It was, I believe, the 4160 puts for about $55, right? $55 per contract. On this complete move down to the downside, I think I got out like right at that 4187 ish area, because that was my price target. I said I want to see 4187, and I was able to be out of the play with a 200% play just from here to here, right? Because of the time, right? When that, what time it was easier for that move to happen. So understanding that this is a 200% play. Now, this wasn't, at the top of the day. This was as price, as we made a, we want at this point, we didn't even make a lower low, right? Like from here, right? We were still, sorry, we made a lower low right here, and then that pump right here. This told me right here, when I wanted to get into the play, that this is having a hard time getting above that 4205 and holding that 4205 for that pushback towards 4210, 4215. So it was a small play, and I said that the stop loss would be 20%. It never went red, which was a nice thing, right? So it never went red, and I instantly it just went green. And so understanding that, the reason why, and knowing that, okay, well, when are you going to take your losses at, if you are in the wrong play. Now, a lot of traders have a hard time grasping that. And when you can grasp that, when when to take a loss, then it's you're not going to do well in the market. As I explained this here previously, was the same exact thing. You're not going to do well if you continue thinking that like your play is just going to be 100%, or you're going to be profitable in every play. And now when your play does go red, what do you do? Right? And so do you get out? And when do you get out? Where do you get out? Those are the things that traders have a really hard time understanding, right? Because they don't want to take a loss. It's nobody wants to take a loss, but you have to understand that you have to take a loss sometimes, and you could cut your losses and be able to get back into a play. And it's never too late. It's never too late. Like, you can miss so much of a movement, but you can still generate profits, because there's always going to be a rebound, or there's going to be a continuation to the drop, right? So there's always going to be some sort of way for you to make money. Now, you want a good setup, right? So when you see a good setup, obviously, you look to get into your play, right? And you don't have to always be in a play. And I think that's where a lot of people have a hard time with also, is like they just always want to be in a play. So whenever the market's open, and they're on there for like 3-4 hours, they always want to be in a play, which isn't the way to go. Honestly, it's not the way to go. You have to wait for the steps. That was my only like alert today, was one play. Besides the live stream plays that we did, 200 and some percentage on just on a put position. And so when I first started doing options, I don't know if some of you guys had this issue. When I first started doing options, I had a hard time playing puts, because I felt like I'm betting against people that have shares, with Apple, with Amazon, Google, anything, right? And you're betting against that. And I felt bad, right? Because we were in a bearish market. This was last year, like around in January, February time, we were going bearish, right? And I just felt bad. And then you had the whole Russia situation when the war started or whatnot. And then I felt even more bad. I'm like, man, like I'm like taking people's money, that are, they're selling for losses or whatever. They're in the 401k, and I felt bad. And I had a hard time playing puts. Like, I had a really hard time playing puts. And then I realized that you have to make money, and it's okay to play, either direction. And, it's They're not going to care about if you make money or not. You have to care about if you're going to make money or not. Yes, it's sad that there's a lot of people's account that that got obliterated because of that whole drop, and some people sold, panic sold. And that's the thing, that's what Institute wants you to do, is panic sale. Why? Because they're getting it at a cheaper price. You got it at five. Like, say for example, you got Nvidia at 500, right? You foamed in at the end, and you got it at the high. So you got in at 500, and then it hit like 450, and you sold, for $50 loss per share. So imagine you having 100 shares, right? You selling $50 for loss, that's 5K. Now, guess what? Somebody out there is going to buy your $450 that you lost out on, and they might buy there. And, when it pops back up, they're going to sell and make money. So, like test, like obviously you want, it's going to be a bigger drop that they're looking for. And I give you an example is before, in January time, when Nvidia hit about like 130, 120, 130, that entire drop, right? So people were panic selling at 150, 130, 140. They were panic selling, and you had institution that was just buying it up. Why? Because it was at a really good price. That's a discount. That's more than a discount price. And so you have institutions that's buying it up because they created FOMO, right? They created fear in the market, and they were able to just buy it up. And then obviously from $120, $130 all the way to $500, $400, $500 is where institutions just started offloading. Now think about that. You get into 100 shares, bare minimum, right? And you're getting it for $150 per share. You're not spending that like an arm and a leg, and you're making triple the amount that you put in. And so, obviously they're doing thousands and thousands and thousands of shares, but I'm just giving you an example how it plays out. And then there's another one out there that's called FNGU, which is part of the whole semiconductors. That was at $36, $38, and that thing blew up to $220, right? And that's the same time when Nvidia popped up. And so when you start seeing these things and knowing that, okay, it's okay to play both directions, whether it's calls or puts, you're there to make money, right? And even as you're playing options, it's a dangerous game. A lot of people thinking, well, it's just a premium, but it adds up. A lot of people don't just do one contract. They'll do 10, 20, 30, 40, 100, so forth contract. And it's not as easy. If it was, then a lot of you guys wouldn't be in Discord. So a lot of you guys wouldn't be looking for that assistance or that help. You guys wouldn't be on YouTube, looking for help, right? Because if it was easy, you wouldn't need any help. But it's not easy, right? It's not easy. It's just understanding and knowing when to get into a play and when to get out of a play. And so as the time goes on, as the market, changes the course of what it's doing, you as a trader have to understand, when you can get into a play and when you can exit a play, right? And knowing when to do swing plays for calls or swing plays for puts. Generally, I don't like doing put plays for swings, just because the market always tends to rebound at some point, and you never know if it's the next day. So what I like to do is, instead of playing a SPY put and I feel like it's still going to down, I'll just go on to a SPXS, the 3 times leveraged calls, and I'll just do a call position. They're cheaper, and their profitability is up there, right? Just in case, if I feel like, what, the market can still continue dropping, I'll just do that. And instead of me spending $300, $400, $500 per contract on SPY, I can spend $50 per contract on the other one and still make 100 to 200%, because it's all about the percentage. I think that's where a lot of issue happens, is that people look at the dollar amount and they want to make the dollar amount. I want to make $1,000 a day. I want to make $5,000 a day. I want to make my play has to have like $100 per contract. And you want to stop that. You just need percentages. Your trade that you do, every trade, as long as you're profitable, you have a 2-to-1 ratio, meaning that your profitability is 2-to-1. So if you're in that means that if you got into 10 plays, out of your 10 plays, out of the the 10 plays, basically half of that position should be double the profit than your losses. So, you should be at 40% profits, for example, and your losses should be no more than 20%. So that's a 2 to 1, right? 40 to 20. So those are the things that you want to kind of, gauge and think about. And I kind of explained that last YouTube is, what you as a trader need to do. So tomorrow, I think we're coming back on tomorrow, and I'll have more of a game plan on what we want to kind of go through. Today we're just going to keep it short and simple. I just wanted to kind of show you the chart and just show you guys what the S&P 500 did based off of what I gave you as the chart, right, from the beginning of October. And that's all it was. I just wanted to give you that and showing you that how it played out. And that was the main thing about today, was just how it played out and why uh, price action is very, 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 very crucial and very, very important. Where I think a lot of traders, they want to focus on everything else. They want to focus on supply and demand, which is okay. They want to focus on breakup structures and change of characters and so much technical aspects, where as a common trader, you don't need to know all that. It's good to know it. It's good to learn it, obviously. But when you're not trading futures. If you're trading futures, obviously, you want more of the TA, technical analysis, because futures isn't easy, right? Just as quick as you thought, like, options is quick to lose money. No, futures is even crazier. Yeah, they don't have theta and all that, but if you're on the wrong end of the stick, you can be down huge, especially if you don't have that stop loss in mind, right? So when you're trading futures, or when you decide to trade futures, or those that are trading futures, they're the ones that use the bigger TAs, right? Where they're looking for smart money concepts, basically. That's basically what it is. Whereas a normal options trader, you don't need to go through all that, right? You can just play off of price action, volume, price action, put in your EMAs, and that's it. And I think people make it too complicated for no reason. You don't have to make it complicated. But that's about it. I know that we're keeping it short. There's not much to really discuss about that aspect, but tomorrow we'll dive a little bit more actually into the market and see what causes certain things and why certain drops happen and why certain places it picks up, and where do we as a trader or as a retail trader know that, hey, this is a time that's okay to get into a long position. And because right now we're very close to getting into some long positions, I think. And so, you don't want to you don't want to try to catch the falling knife, which is where we're at right now. But, just to kind of show you guys tomorrow is, what I'm looking at and how I look at certain things for us to get into a longer position. So stay tuned for tomorrow about that. If not tomorrow, then it'll be sometime next week. So, I'll get in touch with the team, and you guys will know if we are streaming tomorrow or next week. But other than that, that's it for me. Hope you guys have yourself a great rest of your day. Good luck trading tomorrow, and play smart. Let me drink my